Good morning, everyone. Welcome to our Friday morning trading session. TGIF. Woohoo! um, the market's just opened up, and it looks like it was rather quiet in the overnight here as far as the NASDAQ is concerned. You can see here was the London Open after yesterday's continued rally, which I admit is a little bit of a surprise, but the market just kept plugging higher and higher. In hindsight, it was a beautiful day to trade. We are now seeing the market slow considerably through the overnight. And that makes me wonder whether or not we're going to see anything develop here this morning. Oh, just a quick reminder to everybody. While I think of it, there will be no trading room on Monday. That's this coming Monday, May 18th. So please don't show up. I won't be here. Okay, you can see here the Eagle, the NASDAQ bouncing a little bit off of the ATR here. Hasn't flipped the ATR over. So they're struggling a little bit on the highs, maybe. Okay, Richard's asking a couple of questions here. Richard asked, can you please review the proper use of the flight path? Yes, I can do that. Just 1 second here while I get the flight path going. Okay, come on, flight path. There we go. The only problem with the flight path is that sometimes it takes a little while to build it. Once you get it done, though. Okay, the market's still flip-flopping a little bit, which is fine. Okay, just a couple more and I'll bring that over. And Richard is also asking, should the brick size of the flight path and the charts always be the same? I'm not sure that you can actually change the brick size on the flight path, truth be told. Okay, just a couple more, and then I'll bring that over here. What I'm doing, here I'll show you. So I'm building the flight path. Here's the flight path, and I'm just adding the markets that I want. So let's say I'm going to watch soybeans, and we'll throw wheat in here. So that's why I say it takes a little while to build it, but once you have it built, bring wheat down here, soybeans down here, there. And I like to throw an empty row in between the different markets so that it makes it a little bit easier to follow. So here's the flight path, and the idea behind the flight path is that it's going to give you a heads up to trading opportunities, essentially. And I usually like to make my flight path a little bit small because all I'm really interested in is which markets are in sync or which markets are likely to get into sync. So if I'm looking for trading opportunities, right now wheat looks like it's a good opportunity because it's long across the board. It looks like the euro, right now the only thing which is out of sync is the falcon, in which case the eagle and the hawk are already short. So I might go to the euro and look for a selling opportunity there. Markets like this where the YM is a little bit more, well, the YM's also pressing. We've already got the short signals on the hawk and the falcon. So we can go to the eagle, look for that to trip long. The DAX already short across the board, suggesting that we're going to see a turnover here in the rest of them. So it's just a little bit of a tool. When you get something that's all three tools are red, all three tools are green, those are usually ones that I'm looking to take advantage of right away. Ones where my hawk and my falcon are already short and the eagle is not in sync yet, that tells me too that the eagle will probably capitulate and fall into line also. So I'll go to the YM. I bet if we throw the YM up here, we're going to see that there was probably a pretty good opportunity to sell. Now, of course, we could also add the Raptor. Oh no, that's pre-programmed. I was going to say I could add the Raptor to that also. So let's take a look here and see what was going on with the YM. So the YM currently short on the short signals producing on the Falcon and the Hawk, the Eagle not in sync yet. Okay, so here were the short signals. There was a short signal right here. That was a trend change signal. And the market's still, well, floundering somewhat. I'd be looking for the Eagle to come into sync here now. And you can see where we had the red bar buy, and now it's perhaps going to come back down here, retest, and that would put everything into sync. Notice now the NQ, how much more bearish the NQ has gotten. The NQ now also short on the Hawk Falcon and long on the Eagle. Oh, they're starting to fight it back a little. So that's how I use the market analyzer. Actually, I should have pulled it up yesterday when the markets were, the NQ was especially quiet. And it gives you a real quick snapshot of the other markets. So if you're looking at, say, Well, let's say you're watching soybeans and soybeans aren't doing much, and you say, oh, well, wheat is looking fairly interesting, so then you just go pop over to the wheat market. That's the idea behind the flight path. It gives you a bird's eye view, if you will, of what's going on in the different markets. Oops. Anybody else having sound problems? I see Phil said that he couldn't hear me. Oh, okay. No, good. Thank you. All right. Hold on, everybody. I'm just going to shoot Phil a quick note here. Okay, so we'll send that off to Phil, see if we can't get him squared away. Oh, and here comes the NQ heading lower. Let's see if we can still take advantage of a signal here. I was waiting for the trend change signal here in the Falcon. And this little swing here in the trend line spoiled it. You could have traded that as an early trend change signal. Remember the early trend change signal, we've got the test of the extreme, the failure, and then the market heading lower off of that signal. Now we've got the proper trend change signal. We're into the hard edge. Oh, shoot, here. My Raptor didn't load correctly. 1 second. I need to force the cloud to load. I don't know why that is. I wrote Ben about it and he got back to me, but I haven't had a chance to fix it up yet. Okay, so before we leave the flight path question entirely, Richard is asking, should the brick size of the flight path and the charts always be the same? Well, unless you're going to run 2 sets of charts and assign 1 set to your flight path. In other words, let me get the flight path back here. When I'm loading the tools on here, like let's say I want to add, I don't know, I'm going to add crude oil. Unless I have another chart other than crude oil or June crude, which might actually be nearing expiration, that's the one that it's going to default to. So you don't really have a choice as far as the flight path goes as to what your brick size will be. Okay, Richard is asking, what is the proper way to view a condition where the Falcon is out of sync with the Eagle and the Hawk? Well, the Hawk, of course, is the fastest of our tools. It's the scalping tool. So it's going to flip-flop a little bit more than the Falcon, and the Falcon will also be a little bit more reactive than the Eagle. It's just the nature of the tools. So if I see the Hawk and the Eagle in sync and the Falcon out of sync, I would be inclined to believe that the Falcon will come into sync with what's going on the Hawk and the Eagle. But like I said, what I tend to do with it is if I'm watching, say, well, right now the Falcon is out of sync with the hawk and the eagle, so I would anticipate the falcon to come into sync. But normally if I'm looking at this and let's say the market I'm watching is not really doing very much, I would be looking at something like crude oil and I'd say, oh, crude oil is short across the board. Let's go take a look at crude oil. Or I like to see this as well. If my hawk and falcon are in sync and the eagle is out, that's usually interesting because the eagle, of course, being the trend trader and the hawk and falcon being the shorter tools, very often they will start to signal early and then you can go take a look and see, oh, why is the eagle not in sync with the other two? But if I was watching this and I had nothing going on, I would definitely go check out crude oil. Before I forget, I'm going to check crude expiration right now. June 5/21. Oh yeah, we've only got another week on crude oil before we roll into July. All right, so here they are coming off a bounce off of the hard edge, a red bar buy signal on our eagle. Oops, let me get that back here. I'm going to dial down the risk amount a little bit here. The red bar buy is a good signal. And what I'm going to do is I'm going to I can't do it at 1%. How do you like that? I'm going to use my logic counter and enter above the high of this current bar. Now you could view this as a second push entry also and take it just above the high, the current high of the bar. What we're looking for here is a test to the extreme. We will know shortly whether this little hiccup up here was the test to the extreme or whether we're going to anticipate a larger retest before the market folds over. Is it quarter to the hour? Oh, in that neighborhood where I get these less than desirable signals. A couple of questions from you guys about the flight path. Yeah, it's not a tool that's gotten a lot of press. It is available. Let me get you the details on it. Okay, I'm having a little trouble finding the where the flight path went. 1 second. Where'd you go? All right, well, I won't waste any more time with it. It's somewhere on the indicated warehouse site. Either that or you can email Adam directly. Okay, so I guess I should hit the submit button. Oh, darn it. Pressing all the wrong buttons today. Okay, back to the trading. Mark is asking, Eric, can you please explain the red bar buy? Absolutely, Mark. The red bar buy is a signal which is unique to the eagle. It occurs whenever the market, or I shouldn't say whenever, it occurs or can occur when the market encounters the hard edge of the trading band. The market will begin retreating into the band. The bars will turn red, but you're going to notice it comes back with a buy signal. That's why we call it a red bar buy. So here the market has retreated, the bars turned red, they're still red, but we're producing a buy signal. We have a green warning dot, we have a green triangle hash mark. I've been using the ATR as a filter. So I actually wait for the market to get on the other side of the ATR. So here, let's show it like this. So here the signal is producing. It's flipped over the ATR. I suppose I could have taken it at that point, but by the time I saw it, it was already a bar late. You can also, with the Eagle, try to incorporate what we call a second push entry. And all the second push entry does is it lets the signal engage, and then the next bar will usually show you a little bit of a reaction. It happens almost all the time. You see here, even the ones that are with trend, the bar engages and then the next bar shows some sort of reaction, and when it starts trading against, you can place your order above the high of that bar. The idea is once there's renewed momentum, the market will continue in that direction. So the red bar buy, currently still a valid signal. It looks as though the market is flattening out a little bit, but I would still anticipate some sort of reaction there. Okay, the yellow bars Starting to cluster a little bit here in the hawk. That's not a very welcome sign. Mark is asking, is the red bar buy on the Eagle a high probability signal? Yes, sir, it is. The market is at a little bit of a loss right now, which way it wants to go. The lack of overnight movement tells me that the market is really perplexed. It could go lower as easily as it could go higher right now. I still anticipate that it's, well, actually my gut says it wants to go down. We might get a rule of 3 here, which may actually only end up being a rule of 2. Now the rule of 3 signal on your Eagle is when you get 3 signals against the trend. Remember, we use the band to determine our directional bias. So right now we are bullish, but I've produced one sell signal here. I'm likely to produce another sell signal here. You see we've got the red warning dot. And then while the band is still bullish, I'll probably produce another sell signal here. The rule of 3 says go ahead, sell that third signal. However, the rule of 3 must always be preceded by a test of the extreme. That's what makes a rule of 3 also a reliable signal. Now, sometimes you don't get all 3 signals against the trend. Rule of 3 is an average. Sometimes it will be a rule of 4. Sometimes it will be a rule of 2. You're only going to get 2 signals. But regardless, it will always have that test of the extreme. This is why I'm thinking if the market fails here, I'll give it a go. I'll try to short it based on the signals against the hard edge and the test of the extreme. Now, as with all our counter trend signals, you can always treat the counter trend signal simply as an early warning. Because if this trend is changing over, we will produce a with trend signal. Here you can see, actually, this is a rule of 3. That's making a liar out of me. 1, 2, 3 signals against the hard edge, no test of the extreme down here, no hint whatsoever that the market was going to honor that rule of 3 and rally. But even once it started to rally, you see we produced our with trend signal right here. So even though I would not have taken that rule of 3 breakout, because to me it didn't have the structure yet. To me, I would have anticipated this pullback move right here. Or had I taken it, I would have certainly risked it all the way down there in anticipation of this. But I more likely than not would have avoided it. And then a little while later, we get the with trend signal. So you're almost always guaranteed a signal. So even though, here we go, we're about to produce our second signal here. There it is. Now, we're just about to flip the ATR. So this current bar that we're working on, now we've flipped the ATR, so I can enter below the low here. I'm going to cover it way up there. And what I'm basing this on, it's technically a rule of 3 style formation, even though we've only gotten the 2 counter trend signals. But I do have the structure, right? I have my test at the extreme, and I'm anticipating the market to head lower. I'm not rolling my stop just yet, or I'm trying to hold a more liberal stop because, well, hey, it's still technically counter trend. I could see another move higher here. I could see the market try to do one of these. Get back up here, retest, fail, come down, produce my 3rd signal. That would be my rule of 3, and then they finally go lower. Right, so that's a very real possibility. That's why I'm holding my stop. Now you can see I've got my break-even trigger in. So if I hit the break-even, well, I'll let the, there we go, trade auto rolled to break-even. And now we're gonna hope for the best. There we go. I'll get ready with my bar high low or parabolics. Try to capture some of that open profit. Get down there, you stinkers. No, they're going to tap me here in a moment. Our parabolics. Were parabolics a little more generous? Yes, they were. So perhaps I was a little bit too quick with that. That'll be a note for the trading journal. That's definitely one of my bad trading habits. Speaking of bad trading habits, little segue there. Rich Friesen is hosting a presentation on Tuesday, May 19. And hold on one second here. It's all about getting rid of your destructive trading habits. So there's Rich down there. He's a trader turned psychiatrist or psychologist. I forget which it is. Anyways, he's a pretty smart cookie. And what he does is he helps you get out of your way, essentially. Very smart fellow. If anybody is interested in that webinar, you can get to it via that link that I just shared to you. It's free. The webinar is free. Somebody was asking, is there a cost? No. And I'll tell you, Rich always gives valuable information at these webinars. He's a very generous fellow. Very generous fellow. He's not one of these guys who's always got his hands out, saying, well, I'll show you how to do this if you pay me. No, he's not like that at all. Okay, Richard's asking about the ATR filter here on the Eagle. If I don't know whether the Eagle loads with this now straight out of the DTS package or whether you still need to add it. Normally this red blue little squiggly line is not on your Eagle. Your Eagle probably looks like this. Oh, by the way, See, now we're getting our with trend signal down here, which we'll address in just a moment. Mike Filagera, who is the fellow who likes to trade the stock markets with the DTS tools, showed me that ATR line that he likes to use as a filter. Now, DTS is robust enough that you can add pretty much anything you want to it and still generate signals. I've shared with you guys before how there's a fellow that I work with. He just loves Bollinger Bands. He's got to have Bollinger Bands on everything. And so he wanted to put Bollinger on his DTS. I said, go ahead, knock yourself out. So you can see you're still producing signals, and he likes to, gauge the signal relative to what he knows about Bollinger Bands. Okay, terrific. If that helps you make a decision, then by all means use it. If it does not help you make a decision, it's got to go. Well, Rich's ATR line was very helpful, so I've incorporated it into my own trading, and essentially the notion is that we're just using it as a confirming filter. To add the ATR line, go to your indicator window, and in your indicator assortment, all these down here that start IW, you're going to find one that goes IW TM ATR trail. Now you're going to notice a few others here. You can do chandelier, you can do percent trail, you can do super trend. Essentially, this is where your trade manager goes to get certain programming elements. Double click on that so it appears down here in your windows. You don't need to change anything, just click apply, and voila, squiggly red and blue line. Like I say, I've been using it mostly just as a confirming filter. So right now that we're producing a sell signal, the ATR is in sync, everything is in sync. That would tell me, okay, this market is saleable. I'm still going to risk it a little bit higher though, above the swing high. Let's go with the swing high-low strategy. We'll go 2 ticks off. There we go. Okay, so this signal you could still leave it in here. This signal has retreated. We'll see whether or not we produce another one. Oh, Mark. Yes, Mark's asking my computer setup. Sorry, Mark, I forgot your question. My computer setup is I have 3 monitors. When I host the room, 2 of the monitors are dedicated to charts. The third one is dedicated to the room software, the recording software, the question panel, and all that other stuff. As far as what size monitors, get the biggest you can afford. There's nothing better than having a lot of screen real estate. I have got 2 21s and a 24. Now, most computers nowadays are set up to run at least dual monitors out of the box. Some, like with mine, I had to get a special adapter in order to accommodate the third monitor, but even those are becoming more commonplace now. Ray Burke bought a real high-end trading system, and we're getting a trend change signal now here on the Falcon. And he has 6 monitors with, I think, 21-inch monitors on each. So he's actually watching, he's dedicated a full 6-inch monitor to each tool. So he's watching, okay, I'm stumbling over my words this morning. He's watching 2 different markets. He's dedicated 3 monitors to each market. That's what I'm trying to say. It's a very slick setup. He's got a very high-end trading computer. The only difference between a trading computer and the computer you might pick up at Best Buy is the trading computer is smoking fast. It's got all the latest processors, all the latest video cards. But short of shelling out a couple $1,000s on a trading computer, you can buy yourself a high-end trading computer, buy the fastest chip you can afford, buy the fastest video card you can afford, and you'll be all right. Okay, so here we're getting a trend change or a possible trend change signal on our Falcon. So our trend line has changed color. We have the up, down, up pattern. It's totally counter trend, which is why I've dialed down the risk amount. We also had a up, down, up pattern here where I'm covering the position. I would much rather be selling this than buying it because that is the trend, but hey, the Falcon says, no, we could get a rally if we get in above these highs, so I'll have to go with what the Falcon's saying. Okay, so I'm going to hold my stop now until I'm sure that the buyers have control. So in other words, I'm expecting the sellers to try to knock this down somewhere. Well, it looks like they're going to do it right now. How do I know the sellers are going to knock it down? Well, they've brought the market down in a huge way. Every time the buyers tried to bring the market up, sellers knocked it back down. So there's every reason to assume they'll try to do it again. The buyers have held them off a little bit here. Right, we had our little up, down, up, kind of a double bottom type thing. And we had another run up here, a little bit of a trend change type signal. You see, my fear is that this is going to turn into nothing more than a bear flag. And then we're going to see the market fall off. But somewhere through here, the buyers should step up before we violate the lows. That's why I'm trying to keep my stop all the way down here. That's why I dialed the risk down. Oh yeah, come on, get up there. Give me just one bar, and that'll be my cue that it's going to be time to get more aggressive with my stops. Come on. The hawk still yellow. The eagle still bearish. The raptor coming out of a double pullback. So the raptor right now looking very bearish. Oh, darn raptor. Come back here. All right, I better get back to my trade. Okay, a possible red bar buy now on the hawk. The red bar buy, one of these signals we can trade either way, right? We can trade it higher or we can set up to trade the failure lower. So a little bit of a conflict in signals right now. Okay, I better get back here. I'll throw the submit order there. Get ready for the failure. Now you can see the Falcon starting to rally. Now I'm going to go with my more aggressive stop strategy because the buyers have stepped in, right? The buyers have stepped in and said, okay, we're going to hold the market right here. So if that fails, then that is as good a place as any to leave. Really, really tight tug of war going on right now. And I think we're going to have a similar signal here on the Eagle. So the Eagle coming back with our with trend signal. Hasn't flipped the ATR yet, so what I'll do is I'm going to let it turn the ATR over. So we're going to let this red-blue line all sync up. It will mean delaying the entry for a bar. However, it will avoid this type of scenario where the market just pokes a little bit higher and then reverses. Look at that. Here's another red bar buy that would have been successful to the upside. We would have hit our high probability profit objective. I need a little bit of help here on our Falcon trade though. Oh no, there they go. They're starting to turn over. Get up there, buyers. Come on, where'd you go? All right, so we're getting ready here on the, we can still set up to sell the red bar buy. You can always use it just as an early warning also. And in fact, what I'm going to do is I'm going to throw a runner on this because if this fails here, I have a feeling we could be in for a little bit of a ride. Come on, Falcon. See, we're getting all these green warning dots. There is some buying pressure here. They just haven't followed through. Okay. So we're getting a trend change signal now to the downside. We've got the warning dot. I'm going to anticipate the warning dot. It's essentially the same trade as what we're looking at on the hawk. And these are both very tight little trend change signals, not something I normally get too excited about. guys. I did it again. I stopped myself out too early. That's twice in one day. That's not going to make me happy. Okay, you can see we're producing a first micro macro cross warning dot now on our hawk trade. Our falcon also just about ready to print that hash mark. Oh, you guys. No follow through. What is that? That's not right. Too many yellow bars. See all these yellow bars? Normally when I get a lot of yellow bar clusters like this, I just resign myself to the market being in a range, and I'm just going to wait for it to get outside the range. I did take a poke at this first micro macro cross signal. I still believe it to have some potential. Celicia is asking, will there be a one-tick or a one-click feature on the trade manager? I miss a lot of trades while trying to set my trade up, and prices already moved in my direction. For that, you may want to entertain the Trailblazer, which is a one-click system. So long as you have stops enabled, all you need to do is place your entry. And if we get a chance here, I'll show you. So you preset your order parameters up here. The problem with the one-click feature is that you're not able to use the risk manager function. So you're going to need to know approximately what your risk exposure should be for any given situation. And it's not going to ruin you if you take one contract too many or one contract too few, but you should have a rough idea what your average position size is. So we've got a double pullback here into the Raptor now. We're looking for a sell signal to originate. The easiest way to enter is with the buy and sell buttons up here. Alternatively, you click on the chart and you enter your order that way. These orders are live the moment you put them on the chart, unlike the Trade Manager orders, where you need to click the Submit button first. Yes, Salish says, I like the Trade Manager because of the risk component built in. Unfortunately, that's the trade-off between the two. If you like the one-click feature, which is handy to be sure, Let's see, we'll get ready here for a sell signal to print. And then all I'll need to do is just watch the market engage the sell signal, hit the sell button, and everything else will spring into action. See, at the moment, the Geiger counter looking a little bit more bullish. We're getting a lot of bullish flavor in this market. Crazy. Yes, this is the Trailblazer on the Raptor. I put it on the Raptor because it's, well, when the Raptor first came out, it was bundled with the Trailblazer. You can put the Trailblazer on any of the birds. Likewise, you can put the Trade Manager on any of the birds, including the Raptor. Actually, when I was first showing the Raptor in the trading room, I had the Trade Manager on it, but some of the new Raptor owners were using the Trailblazer, and they said, how do you use the Trailblazer? So I put the Trailblazer back on the Raptor. Okay, might be an interesting opportunity here in crude oil, which has been pretty much in a downtrend all day. We're getting a green bar sell. Now, remember the red bar buy? Well, this is the selling version of the red bar buy. It's called the green bar sell. The principle is the same. The market retreats into the hard edge, comes out producing green bars with a sell signal. So that makes it a little bit more bearish. We're currently against the ATR, so here too I would wait for the ATR to turn over. And then look to possibly sell that. We're going to need to wait for things to turn over a little bit. Neil is asking, I know you've been testing out on the Raptor an 8-tick cloud and a 10-tick filter instead of both being set at 12. What are your thoughts on that? Well, very observant, Neil. Yes, I am still testing. I changed the filter down here to a 10-tick instead of a 12, and I did speed up the cloud because I was missing some signals because they were out of sync. At the moment, I'm pleased with the results, but like I say, I am still testing. It might be a little bit early. That is one thing about the Raptor, however, it was made a lot more tweakable than the other birds. The other birds, the programming is locked. Okay, here comes that crude oil setup. We're just about to flip that ATR over. Turn over. Please. Oh, maybe not. It's a tough sell because here on our hawk in crude oil, we're producing a macro pullback, which could be a strong buy signal. So we're a little bit at odds. What you could do, I suppose, is you could set one to buy and one to sell and see which one fills first. Of course, the hawk is looking for a much tighter target, so there's no reason at all for the hawk not to find its target before, or find its target, reverse, and still head lower, according to what we're seeing on the eagle. Oh, we're sweating this trade hard. See, we're still within inside this range. We're about to get tapped. Yellow bars, first micro macro cross here, failed. First micro macro cross here. Now this first micro macro cross may carry something with it because this one failed. We know the first micro macro cross is a strong signal. It's not a signal we expect to see fail. But like I said, we're within this trading range right now. I'm going to let it get out of there. Give me the retest. Likewise, down here, it can get out, retest, and then I'll look at selling. Right now, however, it's just, you're just asking for it. Pretty much saying, please take my money. Pretty please. Well, I want to say it seems typical of a Friday. And we'll hang with them for a little while longer. They're having bullish tendencies, but look at our eagle. Our eagle very bearish right now. Might be producing a rule of three to the upside. Do you see that? We've got a bearish band. We're producing buy signals, violating the hard edge. We've had a test of the extreme. In other words, we're producing a higher low. I'm not going to get too crazy about buying anything just yet. And this is the hard part of trading. The waiting part. Waiting for the market to see things your way. Okay, so here we have an opportunity on the Raptor. This is the one-click system, and I'm going to have to go with something a little different for my stop. No, that won't do it. So I'm going to run a 20-tick stop off of the high if I get filled here. And you're going to see the Trailblazer bring in a stop loss for me. Mark is asking, Eric, can you please explain how you use the logic counter? The logic counter is this handy dandy little tool at the end of your current bar. And what it does is it tells you where that bar is going to finish. So sometimes, let's say I wanted to make the market prove me on this bar. It's signaled. I know the bar will finish 44.83 and a half. Well, I can place my order 44.83 and a quarter, just one tick below the low of this current bar should it finish lower. Normally, the logic counter is handiest in a tool like the Hawk, where if I get the warning dot, I can anticipate where the triangle hash mark will print. I can tell you that the hash mark will print 4487.50 because no, sorry, it won't. Sorry, that's the current bar. But the next bar will tell me where it will fill, and I can tell you that that's where the hash mark will print. I know that's a little confusing the way I phrase that, but we'll see here if I can give you a better example. So here we've been brought in on the Trailblazer. You can see that we have our 20 tick stop based on our fixed trailing stop strategy. Trade Manager automatically put in a profit target and a break-even target for me. And now we'll see whether or not they actually do anything. But the whole purpose of the logic counter mark is to let you know where that bar is going to finish so that you can anticipate an entry. Here on the Eagle, I know the bottom of the bar will be 44.82. My ATR is 44.81.50. So if I wanted to be a little bit more aggressive on this, I could perhaps enter an order 44.81, 44.81 quarter. Cover above there. Like I say, that's a more aggressive type trade. The better trade is to take out these lows here. But why not? We're going to live on the edge today. Still within that trading range. That's why I said, all these signals, they're problematic because we're not outside of this trading range yet. Saw what happened when we tipped just through the top edge there, got slammed. Trying to head lower, the buyers are coming back. Well, crude oil never triggered to the downside and instead came back with that macro pullback signal. Nice little rally out of that, producing a trend change signal here on the Falcon. So once again, the signal's printing here. I can tell from my logic counter that maybe I want to enter on the other side of that support and resistance line, cover below this support resistance line, which coincidentally is also where that market made a little bit of a swing. Come on, get up there. Don't stop now. All right, well, we'll put that on the shelf for the time being. We've got a lost market, folks. Oops. Let's get Rich's picture out of there. Well, at least the crude oil trade is working out. All right, scrub that. We're outside of this trading range now. So we're going to look for the retest, possibly get that first micro-macro cross signal. All right, it's starting to signal. We've got the warning dot. I know the hash mark would print 44.91 3/4. Or sorry, that's the top of the bar. The hash mark will print 44.92. Problem with this trade is, where do I cover it? Well, I probably would cover it back there. Or ideally, the best place to cover it is actually below the bottom end of the channel. That gives you the most staying power. And staying power is the name of the game today. We've got some serious resistance here at 44.92. How can I say that? Well, you see we got turned here. The market turned early here, a couple of hits through here. It's just the fact that it's taken so darn long to commit to anything. All right, well, we'll see. We'll see now that they're above 44.92 whether or not they can do anything with it. Oh, there they go. A little bit of follow through. Just about to hit our break-even trigger. Mark is asking, does the Geiger counter give the same info as the filters on all the birds? No, the Geiger counter is a visual of the time and sales. So you can see the time and sales print. The idea behind the Geiger counter is it's going to show you the bias between the buyers and sellers. So if there's more buy orders coming through, the market should have a bullish bias, in which case the histogram is going to be a little bit more heavy here on the green side than the red side. The needle will be turning green. The average will be plotting green, pretty much what you're seeing going on right now. The dial around the Geiger counter shows you the actual bid ask. You can see right now it's fairly even, slightly skewed now toward the buyers, fully skewed toward the buyers. And sellers fighting it back a little, which is not at all unusual. But right now the needle's still pretty green, telling us that there's a little bit more advantage to the buyers. Now the programmer says he likes to watch for spikes in the histogram, because he says to him that indicates stop running. That if you're near a support or resistance area, let's say you're down here and you see a big spike in the sell orders, that tells you that they're running stops, that the buyers are running stops trying to trip up the sellers, and then you should see the market rally from there. Now, I haven't followed it through that much to determine whether or not it's viable to monitor it that way. I tend to just take it for what it is. You know, if there's a bullish bias, my envelope around the last bar is also green. This is also part of the Geiger counter. It gives you the short-term bias. But the reason I only have it on the one is it's redundant, right? I don't need to have it. You can have it on all your charts, but you don't need to have it on all your charts. Oh, they're trying. I'm going to roll my stop here once we hit the break-even trigger. You see we got the test retest type scenario. Oops, better not mess around with that. So if you didn't take the first micro macro cross signal, you could take this one. This is a crazy stubborn market though. Oh my gosh, it's crazy. All right, you know what? I'm not gonna, oh, I can't do the break even just yet. I will roll my stop. No, I'm not. What did I do today? I tweaked myself out of good trades by rolling my stop too early. I'm going to hold my stop and I'm going to put this on the shelf right now. And I'm going to be a good boy. I don't know what to tell you, folks. Everything's kind of dried up here. I think what we're going to do is we're going to take an early vacation or early weekend, not vacation. If you are trading this afternoon, I still like the NQ short. I like it better short than long, but right now the market is putting in a little bit of a rally. Same thing with the stock market. If you're watching the stock market, I still like to see it short. I was a little bit surprised to see a little bit of a rally in here today. Soybeans haven't done very much today. Crude oil still on the uptick, so at least crude oil is working out a little bit. Once again, just the reminder, no session on Monday. And here's the link again to Rich's webinar on Tuesday. If you guys want to take that in, I'm sure Rich would appreciate your attendance. And like I say, Rich is a great fellow. There's always something to learn. When Rich is talking, I'm usually listening. All right, you guys have yourselves a wonderful weekend. We will see you on Tuesday. Bye for now.